Hello traders and welcome to another video review. Today is Friday, October 6, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, today is the first Friday of the new month, of the October. This means that the non-farm payrolls are scheduled for release for today, and this is the key event of today. Anything else is a little bit less important. So non-farm payrolls are scheduled for release as usual, 2:30 during the New York session. So together with the non-farm payrolls, we have average hourly earnings, non-farm payrolls, and unemployment rate. So unemployment rate is expected to drop from 3.8% to 3.7%. Non-farm payrolls are expected to decrease from 197,000 to 170,000. And average hourly earnings are expected to increase from 0.2% to 0.3%. All of this data will have an impact on the especially US dollar and gold and SP 500, and those markets are the one that we are going to take a look at right now. We will start with euro dollar. For our chart of the euro dollar is showing us that the euro dollar is positioning itself ahead of the key data release. We got the low at 1.0448, so we will label it as the key technical support. Let me just zoom in a little bit so you can see what is going on. Momentum is positive, momentum is strong, 57 points. So right now the next target for bulls, because they are in the control of the market, temporary control, is located at the last swing high 1.0618. Of course, in the meantime, we got some other levels here, like technical support at 1.0533. This is the intraday technical support, and of course the minor technical resistance located at 1.0559. We can see that the market is moving above this short-term trend line. Let me make it orange as usual. So on the other hand, any breakout below this short-term trend line will be considered bearish for the market. If the NFP payrolls are bigger than expected, bigger than 170,000, then most likely another spike to the upside is possible, because of course this decreases the possibility of another rate hike by the Fed, which means that there might be a good opportunity for the traders to react on this news, and in the anticipation of the Fed leaving the interest rate at the current level or even cutting them, they might be much more keen to buy the euro, sell the dollar. So this is the situation on the euro dollar 4-hour chart ahead of the NFP payrolls for the month of the October. All right. The next market we are going to take a look at will be S&P 500. Let me just play with my chart. So the S&P 500, we should take a look at this at the 4-hour chart as well. What do we have here? The first very, very important thing is that we are moving lower, right? We are moving lower. We've been analyzing this market. Let me just zoom out back on. We've been analyzing this market just yesterday, and we've noticed that this market is on the daily time frame chart moving lower and is creating the ABC corrective structure. Let me just reiterate this ABC corrective structure for you. What do we have here is this kind of a structure. Yearly high, okay, yearly high 4,612, wave A to the downside, wave B to the upside, and the last final wave of the ABC corrective pattern. So this is of course the simple corrective pattern, is located at 4,200, just above this technical support at 4,195. Now the market conditions are extremely oversold. Okay, so this is a good time for a bounce to the upside. So please be careful and react accordingly to a possibility of a bounce towards the first level. That would be a target, intraday target for the bulls, 4,336. So that's the eventually first target for today, and the key level, to be honest, the key level for the bulls anyway, because it's like a important technical resistance as well. So that's the situation on the S&P 500. possible ABC pattern has been completed. We have the levels, we have the moving averages. We will see how the market will play out the NFP payrolls. And of course, the last market we are going to take a look at is the market of gold, because the gold market is very, very often deeply involved in the behavior of the after the NFP payrolls is published, the overall market behavior. So let me just find for you some important levels. The first thing is the local low and the swing low, 1,812. And as you can see, we've been moving inside of this very specific range for last 3 days. Possibly the market participants await the interest rate decision on the gold as well. Let me just zoom in back on even more, because it looks like we will need this area to be analyzed here. We got 1,829, and just above we got 1,832. So pretty impressive, but narrow zone for the bears. So that's the most important zone, yeah, intraday. Now the market tries to move higher. It tries to move higher from the extremely overset conditions. Tried once, tried two, still much more downside was made than the upside, despite the extremely oversold conditions. Nevertheless, we are still trying to move higher. The momentum is negative. The momentum is weak. Bears are in control of the market right now. We consolidate the recent losses between those two mentioned levels. So please notice the fact that we might break to the upside soon. And if we break to the upside on gold, if we break to the upside on the S&P 500, if we break to the upside on the euro dollar, and all of those markets has been moving down recently, then this up movement will be considered as a bullish correction during the down move only. So the US dollar index should depreciate across the board as well. So that's another clue from me for the incoming NFP payrolls. Happy trading, guys, and see you next week. Bye bye.